So thank you very much for tuning in to this business channel. And today I want to look at the economy and also look at the future of our economy. We have had most of our politicians telling us that after the election, things are going to be very good. But I think it is important for us to be able to look at what is going to happen and why some of these things are happening, especially when it comes to the increased cost of living. I know everybody is hurting, especially when it comes to the cost of living. And it is important for us to be able to also look at why the prices of commodities in this country has actually surged to all-time high. Now, there are three things that are causing some of these challenges. And as I've said there before, we have had what we call the persistent increase in the commodity prices in this country, especially even the food commodities. And we have three things that are causing some of these challenges. One of them is the loss of value of the currency in this country, especially the Kenyan shilling, when you compare with the dollar, and also the slowdown of the economy in the country. And actually, one of the things that I have not also added there is the global price, the increase in the global price of oil products in the country. Now, if you look at our inflation in this country, it has been increasing, say, for 2022. But after that, we have had a situation where we have had a very big percentage increase in the prices. And you can see, actually, by April 2022, we were at what we call 7% increase in the prices. And I do believe that in June and July, we actually have gone to about 7.5% increase in the prices of the commodities. And I think this is what is hurting most of us, especially when the prices of the commodities actually increase in that higher percentages. Now, what is the cause of these price increases? And are these some of the things that we can be able to deal with as our politicians are telling us? Now, I want us to start by looking at the global oil prices. And if you look at the prices of the oil since 2013, you will realize that we have had a decline up to 2015. We have had a situation where the prices also stabilized between 2015 and 2020. And thereafter, we had a very, very sharp decline in the prices of the oil globally, basically because of COVID-19. Now, this was as a result of COVID-19, and you can see at one time it was actually going to some negatives in some of these countries. And after that, we have had a very big increase in the prices actually of the crude oil in the global market, basically because of what we call the recovery process of the economy, the post-COVID recovery processes in the global market. You see, what usually happens is that when you are recovering, most of the companies that had actually had stopped production are now coming back to life, and therefore we have high demand of oil products globally. And this actually leads to high prices of crude oil per barrel globally. And it affects all the countries, especially most of those countries like Kenya, where the production process is driven by the oil, energy from the oil product. So this is one of the challenges that we have had, the increase in the oil market, the oil prices globally, and therefore causing an increase in our imports, and also, mostly in our imports. And when it increases the prices of the imports, then we have a situation where the overall prices of the commodities in this country will also increase. Now, the other challenge that we have had in this country is the issue of the shilling. If you look at what has been happening to the shilling in the last few years, actually this year alone, if you look at 2021, 2022, you can see the loss of value of the shillings from May 2021 to 2022. And what this means is that our imports becomes very expensive. And you can see how much we import. We import machineries, we import electrical products, vehicles, We import steel, and actually I think that is why construction is becoming very expensive. You have seen what has happened to our vehicles, the vehicle industry, especially when it comes to prices. We import cereals, especially from Tanzania and most of our East African countries. You have seen what has happened to the cereals. Pharmaceutical, for those of you who will visit chemists, you have seen what has happened. Paper and all these products have become more expensive, basically because of the loss of value of the shilling, and also the increase in the price of the commodities, the oil prices in the country. So we have an issue of the global prices increase in the oil. We have an issue of a shilling that is losing value to the dollar, which is the trading, the global trading currency. And all that has a negative impact on our import, but it has a positive impact on our export. But just look at the few things that we export in this country compared to our import, and you realize why we have a deficit and why this cannot be able to counter our import, our export, whatever we get from our export, which is going to be more, or the value will be more because of the increase in the price of the dollar, cannot be able to counter our imports, which are very high and also very many. Now, if we go to most of these other countries, the inflation is not just happening in this country. You can see what is happening in Ghana. Ghana is one of the countries that we can be able to have a bit of comparison with. You can see what has been happening when it comes to inflation, and also look at most of the international countries, or most of the OECD countries, and what has been happening to the transport. The inflation as per the transport, you can see what has been happening also in food prices, housing, and also recreation facilities. So this is not something that is happening just in Kenya, but all what we need to understand is that as our politicians tell us that things are going to be switch on and switch off after the election, then we need to understand that there is a lot of the global players that are also triggering some of these challenges that we are talking about, the high cost of food prices and also other commodity prices in the country, that we cannot be able to wish away. And we can also not be able to also control. I know the central bank is trying as much as possible to try and see whether they can be able to control these skyrocketing prices of the commodities in the country. I think 1 month ago, I saw a situation where they tried to increase the base rate, the central bank base rate, to see whether they can be able to tame the circulation of the money in the economy, so that to see whether they can also be able to reduce the inflation in this country. But all what this shows is that it is a game that is more bigger than we think, because it is not just an internal issue, but also an external issue. In the long run, I think we need to think about how we can be able to also reduce our import. And this can only be done if we become a country that produces their own goods and services, or value, it increases value on what they export, and also improve on our exports, so that at least in the long run, we can be able to also reduce what we call the deficit, the export and the import deficit, which is very big in this country. So thank you very much for listening. And I hope that I have created a bit of value in my economic analysis. Thank you very much.